Welcome back, everyone, to another deep dive. Taxes, something I know we're all super excited to be talking about today.
Well, maybe not the most exciting topic, but definitely one of the most important ones when it comes to personal finance.
Right. Especially because I feel like taxes are one of those things that are just way more intimidating than they actually have to be.
Yeah, they can definitely seem really overwhelming, especially if your financial life is a bit more, how do I say this? Well, if it's more than just a single paycheck and you're renting.
Yeah, exactly. Like as soon as you start adding in investments or a house or side gigs or anything like that, it feels like suddenly you're in way over your head.
Yeah. And it can be tempting to just kind of bury your head in the sand and hope it all just works out, but that's obviously not a great strategy.
Not at all. So that's what we're going to try to do today, break down those intimidating parts of taxes and make them a little bit more manageable, right?
Yeah, exactly. I mean, honestly, a lot of it boils down to organization and knowing what documents you actually need to file.
Okay, so let's start there. What does the IRS need from us?
Well, believe it or not, they already have a good chunk of your income information.
Really? Like how?
Well, they get info directly from your employer, banks, and other institutions. So it's not like they're starting from scratch.
Huh, so it's more like they're just kind of double-checking things.
Kind of. They're mostly looking for confirmation and making sure you're reporting everything correctly.
So where do those mysterious 1099 forms come in? I always hear people talking about those.
Ah, yes. 1099s. They're basically how the IRS keeps track of different types of income that aren't from a traditional employer.
So there's not just one 1099 form?
No, there's actually a whole family of them, each tailored for a specific type of income.
Okay, so could you give us some examples?
Sure. So you've got the W-2 for your regular job. That's probably the one most people are familiar with.
Right.
Then you have the 1099 NEC for independent contractors. So if you do any freelance work or gig work, you'll get one of those. And then the 1099 MISC is for all sorts of other miscellaneous income like royalty payments or prizes.
Royalty payments. So if my homemade hot sauce recipe suddenly takes off.
Exactly. Although you only have to report those royalties if you make over $10. Fun fact.
$10? That's crazy specific.
See, taxes are full of little quirks like that.
Okay, so basically if you made money in some way, there's probably a 1099 form out there with your name on it.
Yeah, that's a pretty good rule of thumb. And if you haven't received a form that you think you should have, it's always a good idea to reach out to whoever paid you or to the IRS directly, just to be safe.
Got it. So we've covered income. Now let's talk about the part everyone loves, deductions. They really can make a difference in how much you owe, right?
Absolutely. Deductions are a key part of managing your tax liability. There's the standard deduction, which is a set amount everyone can claim based on their filing status.
Okay.
And then there's itemized deductions, which is where it gets a little more involved.
Itemized. So I need to start digging through my shoebox of receipts.
You got it. Itemizing involves going through all your expenses and figuring out which ones you can actually deduct from your income.
What kinds of things are we talking about here?
Well, things like charitable donations, state and local taxes, medical expenses that go over a certain percentage of your income, even part of your health insurance premiums.
Wow. There are a lot more options than I realized. I'm starting to see why people say staying organized is so important for taxes.
Oh, absolutely. Keep those receipts, even though you don't have to submit them with your return unless you're audited. It's all about having that backup in case the IRS comes knocking.
Speaking of receipts, what about things like mortgage interest and student loan interest? Don't those come with their own special forms, too?
You're right. Those usually come on a Form 1098. It'll tell you exactly how much interest you paid throughout the year.
Okay, 1098 for interest paid. Got it. There's definitely a whole language to taxes, isn't there?
There is, but you're picking it up quickly. Now, before we move on, there's actually one more type of deduction I want to mention. It's called above-the-line deductions, or adjustments to income.
Above the line. That sounds kind of complicated.
Not really. Just think of them as bonus deductions.
Bonus deductions. I like the sound of that.
The great thing about them is you can take them even if you choose the standard deduction. So it's like a double benefit. Things like contributions to certain retirement accounts and some expenses for teachers fall into this category.
So you can get a deduction for being an awesome teacher and for planning for your retirement.
Exactly. And I think a lot of our listeners might be realizing they could be missing out on some deductions they didn't even know about.
Yeah, I think you're right. Okay, before we get too deep into the world of deductions, though, I do want to make sure we touch on self-employed folks. They have a whole different ball game when it comes to taxes, right?
Yeah, absolutely. Self-employment definitely adds another layer of complexity. You're basically running your own small business in the eyes of the IRS.
So what do they need to know?
Well, first and foremost, record keeping is absolutely crucial. You need to be meticulous about tracking everything.
Okay, so where do they even start?
It all starts with Schedule C. That's where you'll report all the income and expenses from your self-employed activities.
So it's like their own little tax playground.
Pretty much. And on Schedule C, you'll have to follow the ordinary and necessary rule for deducting expenses.
Okay, that sounds a little intimidating. What does that mean exactly?
Basically, it means the expenses you deduct have to be directly related to your business and considered common and accepted in your industry.
So if I'm a freelance writer, like my laptop and internet bill are probably okay, but a fancy new massage chair for my office might not be.
Exactly. The IRS has guidelines for what qualifies, so it's definitely worth doing your research to make sure you're following the rules.
Got it. Focus on those core business needs. Now, in the first part of our deep dive today, we talked about deductions that apply to almost anyone, like deducting mortgage interest. But are there other scenarios where owning a home can impact your taxes?
Oh, for sure. There are a few things homeowners should keep in mind. For example, you might be able to deduct your property taxes on your federal return, depending on your situation.
Okay.
And if you made any energy-efficient upgrades to your home, like installing solar panels or anything like that, you might qualify for a tax credit.
Hold on, a tax credit, that's different from a deduction, right?
You're right, it is. Tax credits actually reduce the amount of taxes you owe dollar for dollar. So it's like a direct discount.
Wow, okay, so that's way better than a deduction.
Absolutely. Let's say you spent $10,000 on those energy-efficient upgrades and qualified for a 20% credit. Boom, you just knocked $2,000 off your tax bill.
That's amazing. Okay, so we've seen how homeowners can benefit. What about renters? Are there any tax tips for them?
Well, renters might not have the same deductions as homeowners, but there are definitely still some tax benefits they can take advantage of.
Okay.
For instance, if you itemize your deductions, you might be able to deduct some of your state and local taxes, depending on where you live.
Right, so those itemized deductions can really add up for some folks, especially if you factor in things like charitable giving or medical expenses.
Exactly. And don't forget about those above-the-line deductions we mentioned earlier. Those can benefit renters, too. Like if you're a student who's renting, you might be able to deduct some of your student loan interest.
It's amazing how, like, every little detail of our lives can somehow tie back to our taxes.
It's all connected, right?
Right.
And the more you understand those connections, the better equipped you'll be to actually manage your taxes effectively.
I think you're right. It's not just about knowing what forms to fill out. It's about having a strategy, too.
Exactly. And speaking of strategy, there's one that a lot of people overlook. It's called tax loss harvesting. And it can be a really powerful tool for managing your investment taxes.
Tax loss harvesting. I've never heard of that.
So imagine you have two stocks in your portfolio. Stock A has gone up $500 this year, and stock B, unfortunately, has lost $300.
Okay.
With tax loss harvesting, you could sell stock B and use that loss to offset the gains from stock A. It's a way to strategically reduce your capital gains tax liability.
So you're basically selling something at a loss on purpose. That seems kind of counterintuitive.
I know, it can feel that way. But remember, you're not just losing money, you're using that loss to potentially save money on taxes in the long run.
Wow, okay, I'm starting to see the strategy there. So it's not just about earning income and claiming deductions. It's also about managing your investments with taxes in mind.
Exactly. It's about taking a holistic view of your finances. Another strategy that can be really helpful, especially for self-employed people, is maximizing your retirement contributions.
Retirement contributions, how does that help with taxes?
Well, contributions to traditional IRAs and self-employed retirement plans like SEP IRAs and solo 401ks are usually tax deductible.
So you can actually lower your tax bill by saving for your future. That's awesome.
It is. And the earlier you start, the more time your investments have to grow and the more you can potentially benefit from those tax advantages.
Okay, this is all great information, but I think it's important to acknowledge that even with all these strategies and tips, taxes can still feel really overwhelming for a lot of people.
Absolutely. And there's no shame in feeling that way. Taxes are complex. The important thing is to not let that feeling paralyze you.
So what would you say to someone who's feeling lost and confused about their taxes?
Well, first I'd say take a deep breath and try not to panic. Break the process down into smaller, more manageable steps.
Smaller steps, okay. What would those look like?
Well, you can start by gathering all those important documents we've been talking about. The 1099s, the W-2, anything that shows your income and any potential deductions.
Right.
Then spend some time researching and understanding the deductions and credits that might apply to your specific situation. The IRS website is actually a really good resource for that.
And there are also tax software programs that can walk you through everything step by step, right?
Exactly. Those programs can be a lifesaver, especially if your tax situation is fairly straightforward. But if you have a more complex situation, or you're just feeling really unsure about things, it's always a good idea to consult with a professional.
Yeah, I think that's great advice for anyone, honestly. Sometimes it's just reassuring to have an expert in your corner.
Absolutely. Peace of mind is priceless, especially when it comes to something as important as your taxes.
You're telling me. Well, we've covered a lot of ground in this first part of our deep dive, from essential documents to specific scenarios, even some clever tax saving strategies. I'm feeling a lot more confident about tackling my own taxes now.
I am so glad to hear that. And remember, taxes are just one piece of your overall financial well-being.
Right.
By being proactive, staying informed, and keeping yourself organized, you can approach tax season with a lot more confidence and potentially even save yourself some money along the way.
I love that positive outlook. Now, before we move on to the next part of our deep dive, let's do a quick recap of what we've talked about so far. We've explored the unique world of self-employment taxes, talked about the tax implications of homeownership and renting, delved into the power of tax loss harvesting and retirement contributions, and emphasized the importance of seeking professional guidance when needed.
It's been a pretty packed first part. And in part 2, we're going to debunk some common tax myths that trip people up. But before we get to that, I think it's a good idea to take a moment to de-stress.
That's a great point. Taxes can definitely be a bit overwhelming, so remember to take breaks, breathe, and practice self-care. We'll be right back to tackle those pesky tax myths and wrap up our tax filing deep dive.
All right, we're back and ready to tackle those tax myths. Everyone loves a good myth-busting session.
Especially when it comes to taxes, there's so much misinformation out there. Like one I hear all the time is that if you get a refund, it means you did your taxes right.
Oh, yeah, I used to think that too. Like a big refund was like a prize for being good at taxes or something. But it's not really about being good at taxes. It just means you overpaid throughout the year.
Overpaid.
Yeah. It's basically like giving the government an interest-free loan.
Yeah.
And while getting money back is always nice, it doesn't necessarily mean you optimized your tax situation.
So what would be the ideal scenario then?
Ideally, you want to withhold the right amount throughout the year so that you neither owe money nor get a huge refund.
That makes sense. It's probably better to have access to your money throughout the year anyway.
Exactly. Okay, how about another myth? This one's a big one. Only high-income earners need to worry about itemized deductions.
Yeah, I bet a lot of people just assume the standard deduction is the way to go.
And it might be for some folks, but it's always a good idea to at least check if itemizing would save you more money.
So even if you're not making six figures, you might still have enough deductible expenses to make itemizing worthwhile?
Exactly. For example, if you had a lot of medical expenses this year, or if you made some big charitable donations, or if you live in a place with really high local taxes.
Wow, okay. See, this is why we do these deep dives. You just never know what tax benefits you might be missing out on.
That's right. Knowledge is power. Okay, ready for one more myth?
Hit me with it.
All right. This one's classic. Donating to charity always gets you a tax break.
Oh, yeah. I've definitely heard that one.
It's definitely not always true. While charitable giving can lead to a deduction, there are some important things to keep in mind.
Like what?
Well, first of all, you have to be itemizing your deductions to even claim the charitable contribution. If you're taking the standard deduction, it doesn't really matter from a tax perspective.
Okay, that makes sense.
And the donation also has to be to a qualified charitable organization, not just any random cause. Plus, there are usually limits to how much you can actually deduct.
So there's a lot more to it than people realize.
There is. It's always best to do your research and understand the specific rules before you assume you're getting a big tax break.
For sure. And as always, talking to a tax professional can help clear up any confusion.
Absolutely. All right, so we shattered some myths. Hopefully everyone's feeling a bit more enlightened now.
I know I am. And I have to say, what started as a pretty daunting topic now feels a lot more manageable.
That's great to hear. We're almost at the end of our deep dive, and I really hope our listeners are feeling empowered and ready to tackle their taxes head on.
Me too. And before we wrap things up completely, I just want to emphasize one more time how important it is to stay organized.
Seriously, organization is key when it comes to taxes.
Keeping good records can really make the whole process so much smoother.
And don't forget about the IRS website. It's actually a really valuable resource.
Yeah, there's a ton of information on there. It's worth checking out.
It is. All right, I think we've given our listeners a solid foundation for navigating tax season.
I agree. And on that note, let's wrap up this tax-focused deep dive. We've covered so much ground, from those essential documents to specific scenarios and even some helpful strategies. Hopefully everyone listening is feeling more informed and prepared to face their taxes.
I hope so too. And just remember, if you hit any roadblocks or start to feel overwhelmed, don't hesitate to reach out to a tax professional. They can provide that extra support and peace of mind that can make all the difference.
Absolutely. Thanks for joining us for this deep dive into tax filing essentials. We hope you've learned a thing or two and are feeling a lot more confident about tackling those taxes. Until next time, happy filing! We're back, ready to finish strong with part 3 of our tax deep dive.
Yep, let's do it. We've talked a lot about the practical stuff, like what forms you need and all that. But before we wrap things up completely, I think it's important to address something that trips a lot of people up.
Tax myths.
Oh, yeah, those pesky little things. They can really make things confusing, that's for sure. So let's debunk a few, shall we?
Let's do it. Bring on the myth busting.
All right, myth number 1. If you get a refund, you did your taxes right.
Oh, I think I used to believe that one. Like a big refund meant I was some kind of tax wizard.
Yeah, a lot of people think that. But in reality, getting a refund just means you overpaid your taxes throughout the year.
Overpaid? Isn't that a good thing?
Well, not necessarily. It's like giving the government an interest-free loan. Sure, it's nice to get that money back, but wouldn't you rather have had access to it all along?
That's a good point.
The ideal scenario is to have your withholding set up so you neither owe money nor get a huge refund. You basically break even.
Yeah, that makes sense.
Oh.
All right, what's another myth we can bust?
Okay, here's a big one. Only high-income earners need to itemize.
Yeah, I bet a lot of people just assume the standard deduction is the easiest way to go.
It might be for some, but it's always worth taking a look to see if itemizing could potentially save you more. You never know.
So even if you're not exactly rolling in dough, it might be worth crunching those numbers.
Exactly. You might have more deductible expenses than you realize, like medical bills or charitable donations, or maybe you live somewhere with high local taxes.
Right. There are a lot of things to consider. Okay, last myth for the road.
Last but not least, donating to charity always gives you a tax break.
Oh, that's a classic.
It is. And unfortunately, it's not always true.
So there's more to it than just like writing a check and expecting a deduction.
Definitely. First of all, you need to be itemizing your deductions. If you're taking the standard deduction, the charitable contribution doesn't really do anything for you tax-wise.
Okay, that makes sense.
And it has to be to a qualified charitable organization, not just any random cause. Plus, there are often limits to how much you can deduct.
So it's a bit more nuanced than some people think.
It is. It's always smart to do your research and understand the rules. And of course, if you're ever in doubt, a tax professional can always help.
Always good advice. Well, we've shattered some myths, uncovered some hidden tax benefits, and I have to say I feel a lot more prepared for this upcoming tax season.
I'm so glad. That's what we like to hear. And hopefully our listeners are feeling the same way.
Me too. I think it's safe to say we've covered a lot of ground in this deep dive. We talked about all those essential documents you need, explored some specific scenarios that might impact your taxes, and even uncovered some clever strategies to potentially save some money.
We did. It's been quite the journey. And most importantly, I hope everyone listening is walking away feeling empowered to tackle their taxes head on.
Absolutely. Taxes can be a bit intimidating, but with the right knowledge and a little bit of organization, you can definitely conquer them. So to everyone listening, a big thank you for joining us for this deep dive into tax filing essentials. We hope you learned some valuable tips and are feeling ready to take on tax season like a pro.
Until next time, happy filing, everyone.
And see you on the next deep dive.